Welcome everybody to Property Thursday, same time every week, and we aim to bring you guests from the world of property, whether it be mortgage broker, solicitor, obviously our developers. And it's been a very good week from our end, and especially following on, sorry Paul and Jake, but following on from last week where Lawrence spoke about York. A lot of interest in that, so that's great. And I know there's going to be a lot of interest in this, and I've already spoken to Paul. This is going to be quite educational, so everybody get a pen and paper ready. We are going to be telling you all about the UK movements, what's going on, and at the end of it as well, as a couple of ideas that they've got coming up in the UK. Numbers are still trickling in, so that's great news. So what I'm going to do is welcome, first of all, Paul. How are you? We're starting now.
Yeah, thank you.
Good. And Jake, all ready to go?
All ready to go. Thanks, Chris.
Good. And as I say, everybody, we've got Donna here as well. She's the mortgage expert. Darren is actually busy today. Darren's our usual mortgage guest, but Donna's kindly jumped on, which is great. So any questions? And as I say, every week, please jump in if you've got a question, write them at the bottom of the page, and we'll cover them as we go along rather than wait until the end. That's great. And also a quick ad, we've got previous webinars on our webpage as Holborn Assets Property. So over to you guys. Thank you.
Thanks, Chris. Thanks everyone for taking time. So yeah, what I wanted to do just to start the session off is just give an overview of Global Residential, who we are, what we do, and hopefully how we're a little bit different from potentially other companies that work in the same property investment space as we do. So I will speak for a few minutes, then I'll hand over to Jake, who is a managing partner of Global Residential based in the Middle East. And he will talk you through, not so much into product, but just through some of the key markets that we operate in and the key reasons that why we like these certain markets. So from our point of view, from Global Residential, we're 18 months old as a business. I started Global Residential again at the start of last year off the back of a very senior role within one of the leading property firms globally. But ultimately, we got to a point where it's great doing it for someone else, but we wanted to sort of do it on our own, which we've now done. And really, we built this business to try and just do things a little bit better than hopefully everyone else. And that's sort of the key of what we do. Property as a product is there, it's accessible, but where we really focus on is that client journey and doing over and above for each and every client to make sure they enjoy that client journey. Not so much when it's exciting, which is the reservation process. When you buy something, everyone's happy, but sadly throughout the journey, certainly off plan, that can dwindle and the experience becomes less fun. And we want to make sure that if there is an issue, which property brings issues, that's the nature of what we do, but we manage it in the right way. We keep each of our clients well informed, and we're very much a part of the process as you are. Every product that we have as well, we invest into ourselves. So we put cash into developers, and we only get our cash out on completion. So we're with you all the way. Every step of the journey, we're with you. Completion is the most important part of any property transaction. And again, we try and fill all the bits in the middle. Mortgage finance, which again, we work very closely with Donna, as do Holborn. So we very much focus on not just the transaction on the front end, but the whole of the client journey, all the way through to the lettings and management. We own our own lettings and management services as well. So for each property that we sell, we're with you, we hold your hand, and we, again, hit any issues that arise head on, and we manage the property for you when it completes. So very much a very personable business, very focused on certain markets in terms of what the investment opportunity is. And again, just do everything we can to keep our clients happy. So that ensures repeat business for us and good word of mouth. So in a nutshell, that's who we are and what we do. I know there'll be a Q&A session at the back end, so more than happy to answer any questions at that point. But in the interim, I'll hand over to Jake to talk you through some of our key markets.
Perfect. Thank you very much, Paul. So I'm just going to run you through a bit about why the UK, where to invest into the UK, and then talk about 3 specific locations that as a business we look at and we have opportunities in. So we'll start with the why. There are many whys, and we've picked out 3 here specifically in no particular order. Number 1 on your screen there is the UK property market is a very mature market. So there's over 100 years of history there. And with that maturity comes a very well regulated market with a proven legal system. So as an investor, if you're buying into the UK, you're very much protected, and so are developers. So it works for both sides. And then in the middle here, we have undersupply. The UK is very much undersupplied. It's a small island. There's not much land mass to build on anymore. So there's a huge undersupply problem in the whole of the UK. That's very much concentrated to certain areas, and we'll pick up on that as we go through the slides. But the undersupply is causing an opportunity in terms of property price growth and rental price growth. And then for our overseas investors, there's a huge currency opportunity with the pound still being devalued. Properties long-term, so anyone buying property now, holding a dollar-pegged currency is effectively buying at a discount. When they look to exit that property at 5, 10, 20 years later, you would expect the currency to have recovered, which is where you can then make an additional interest on the back end. So they're just three areas. I touched on the undersupply, and so we're going to deep dive into the undersupply in a bit more detail, because this is really what underpins the UK property market. Now, this graph here is all live data taken from the Land Registry, which is all online, available for anyone to have a look at. And this is historic price growth from 1965 up to 2020. So 55 years of bought and sold property prices across the UK. So what you'll see here is very evident. The property will always increase in value. I've already touched on property being long-term, not short-term. It's not something you buy and exit very quickly. It's something you buy and hold. So as long as you buy and hold property, you will always make money. And it's quite interesting to see here, you know, back in the sort of early 70s, you only need to hold property for 5 years on average, and you would see 100% growth. Fast forward that to present day, you're now looking at around 14 years. And if you really concentrate on where you're investing in the right areas at the right times for the right price, it's quite comfortable to say that if you hold property for a 10-year period, you'll double your money. So that's historic data. Now we've got some current data, so where we're at today. And this graph's taken from the Home Track report, which is a recent report that comes out every month. So this shows here the difference in supply and demand over the last 12 months. So as you would expect, obviously 2020 was an anomaly. COVID hit, everything stood still. So you'd expect there be some pent-up demand from the inactivity of 2020, and that's what we've seen. So there's a higher demand this year for property and property buyers in the market. With that, you see increase in sales. But what you do see here is you see a lack of supply. Now, you would think with not much going on in terms of construction, people moving around in 2020, that supply would be there because people wouldn't be buying. But because there's been so many buyers, that supply is taking a hit, and you've got the current supply and demand imbalance today. And then the last part here is the supply of new homes for sale. So people aren't effectively selling as many homes as they need to be sold. So it's evident there that there's a supply and demand imbalance today, and there is an inherent supply and demand imbalance, which we've discussed on the previous slide. So we've established that the UK is a good market for many reasons. We've touched on 3 main reasons. There are many more. But you've noticed that the UK is a place to invest. Where should you invest is the next question. So again, all recent data taken from the Home Track report. On the left-hand side, you've got a spread of property price growth across the whole of the UK. And as a generalisation, if people ask you where you should invest in the UK, you ask your friends, you ask family members, majority of people will tell you to buy in London or in the south because they have some affiliation to London. London's much more known than any other city in the UK. Generally, it's the wrong advice. 7 or 8 years ago, it probably was the right advice, and London was the place to invest. That's changed dramatically over probably the last 10 years going back. And the opportunity now lies in the north and the Midlands. So this chart here tracks the top 20 cities across the UK. So we'll start here with the UK average house price now, which currently sits at £227,000. Year on year, prices have grown on average 4%. Now, the top 20 cities have grown 3.4% on average year on year. If you now break that down to the top 20 cities, and these are the top 20, there's obviously 20 in total, but I've just picked out the top ones. You've got Manchester sitting at the top. Average house price in Manchester is currently £185,000, and year on year growth has been at 6.5%. You've then got Liverpool, Leeds, Nottingham, Sheffield, and Birmingham. So all regional cities that are either in the Midlands or the north of the UK, which is where the opportunity lies. And all of these cities here have outperformed the UK average. Okay, so we're going back into the land registry data here, and we're taking a bit more of a deep dive. So let's just go back over the last 5 years and actually have a look at property price growth and compare it to the London average, the UK average, and then 3 key regional cities being Sheffield, Birmingham, and Manchester. So lots of information on this slide. This is effectively price growth from January 2015 to January 2021. So London on average grew 24.4%, the UK 29%, which is a great growth over 5 years. Anyone investing into property would be happy with that. Now, what's beaten both the UK and London average are the regional cities. Sheffield at 34%, Birmingham at 38%, and then Manchester right at the very top at 48%, double the growth of London. So you can see that there's a clear opportunity in these regional cities. There's a clear opportunity in the UK in general, but if you really dig deep and find the locations you want to be looking at are regional cities. So this just looks at price predictions over the next 5 years. So we've looked at real life data, and we've looked at that over the last 5 years. We've looked at the last year. Now let's have a look and fast forward to how that might look in 5 years' time. So this is a report that Savills recently released in March 2021. And again, they do something similar. They look at the UK as an average. They expect property price growth to be around 21%. At the top, again, is the northwest, which is Manchester and Liverpool. You've then got Yorkshire again at 28% as well, which includes Sheffield. And then you've got the East and West Midlands, which effectively is Birmingham at 24%. All outperforming the UK average, or predicted to outperform the UK average. So we've seen that the opportunity's been there for the last 5 years, from 2015. That's set to continue over the next 5 years. And if you look at London, London's down here at 12%. So still some good growth there, but nowhere near the regional cities and the northern cities in terms of price predictions. So we'll just dig deep into the regional cities now, and we'll look at, we've missed a slide there, go back one. We'll look at city centre populations. So again, if you compare everything to London, London's population is around 9.2 million. So Birmingham, Manchester and Sheffield are nowhere near as large in terms of size and population, but they are large cities and large regional cities that are growing. They also have all the amenity that London has in terms of connectivity, international airports, opportunities in terms of businesses, and then they also have large student populations. The student population is what's helping these populations grow steadily. Most of the students that go and study in university here tend to stay and work in the city afterwards. There's around 75,000 students in Birmingham, around 65,000 in Sheffield, and just over 100,000 in Manchester. At least 50% of those, once they've graduated, live and stay in the city and work in the city. So that's given steady population growth. And you can see this is just tracking the last 10 years. Jake, with that population, yeah.
Jake, if I just give you, so you can have a bit of a breather. I was actually on a webinar yesterday, and the guy that was speaking was a guy called Ben Pocock from Barclays. In fact, he's head of structured lending for Barclays Private Bank. And he said, and it stuck in my mind, he said, buy somewhere where somebody else is doing the work. And what it meant by was, whether it be Crossrail or HS2, gentrification, and what's going on in the cities like you've mentioned, Manchester, Birmingham. And in the news last week, the Bank of England looking to put a second head office, if you like, in Leeds. This is why it's happening, and this is where the appetite is. I just thought it was interesting from somebody who's obviously in control of the money from for lending for someone like Barclays, is talking the same language as you are. It's all happening up there because somebody else is spending the money and doing the thing. All you're going to do is buy a property there and wait for the people to come. Would you agree with that?
Yeah, I mean, it goes back to government spend, doesn't it? The government's pumped so much money into the north and the regional cities, especially the northern powerhouse. Yeah. And that's where all the businesses are moving to. That's where the job opportunities are. And also it comes down to affordability. You know, it's much more affordable to live in the Midlands or the north in comparison to London and the south. And that's what people ultimately are looking to do. People working from home more now, as opposed to being in a physical office. If you can live in the same place that's 50% cheaper and do the same job, why wouldn't you do it? So yeah, completely agree with what you're saying there for sure.
Yeah, it's exactly that, isn't it? I mean, there's a lot of locations on this map here, and you can see some of them, some obvious candidates, Manchester being one. Very strong market, but it's always trying to catch the market at the right time. And Manchester, as an example, has been on a sort of a 10-year bull run, if you like. It's seen exponential growth. I was in Manchester yesterday, actually. This whole city's transformed. And we've seen prices. I think when we did our first project there, it was sort of £250 a square foot, bang, prime central Manchester. Now you'll do well anything less than £500 a square foot. So there's been a lot of growth in a lot of these markets, but the focus for us is trying to catch, where is the next market? Where's the next location that potentially could see this price growth over the next 5-10 years? And that's what's exciting for us as a business. We're always trying to look for that next opportunity and not jump on the bandwagon potentially when it's too late. I'm not saying Manchester is too late. All I'm just highlighting is the fact that it's seen exponential growth over the last 10 years. And there's only so far any market or any product can go in terms of price growth. So we're always looking for the value proposition.
Yeah, for sure. That's a really valid point there. And that kind of leads us into the three sort of regions that we're looking at as a business and why. And Paul started off there with Manchester and leads on quite well. So as Paul has said, all of the growth in Manchester has been very much concentrated to the city centre, and it has been on a bull run for the last 10 years. And anyone, talking about property will know or have heard of Manchester for sure. So if you look at this map here, this is central Manchester. And as London has done over the years, the city centre has moved outwards. So Manchester has started to see that shift now, moving into the Media City and Salford area here, and now taking one step further and moving into sort of Trafford and the Eccles area. So, and this is an 8-minute journey on the train from Eccles into Deansgate, which is the main CBD for Manchester, so where all the jobs are effectively. And we as a business, we have an opportunity here in Eccles. And for all the reasons we've just discussed, we've picked this location over the city centre. And then just to go into what's going on in and around those areas in terms of regeneration, I'm just going to pull up some information here. So the city centre is around, 50% more expensive than Eccles, yet you're 8 minutes away. And what's happened now is where all the regeneration's happened in the city, it's now moved outside of the city. So you've got mass regeneration in Media City. The likes of the BBC and ITV have offices here. It's a huge tech and media hub. And then you've got a huge enterprise zone here in between sort of Salford and Manchester, which is where Booking.com have headquartered, and there's lots of tax relief for new business startup here. So within a short distance of Eccles, you have all of this mass employment hub here, as well as connectivity into the city centre to have not just the employment opportunity, but the amenity there. And we have an opportunity called Townsquare, which is located on the high street of Eccles. As I've said, it's an 8-minute journey into Deansgate, into Manchester on the train. The location itself is on the high street. It's walking distance from the train station and the tram. The tram will take you into Media City, where obviously the BBC are and all of the job opportunities are there. But what we've seen from investors is we've seen investors look for areas outside of the city. Now, Eccles is described as sort of like an urban spill out of the city, so an urban village effectively. So you can live in an apartment on the high street with walking distance to all of your amenity and connectivity to the city centre. But you can also be a short walk away from greenery, outdoor space, all the outdoor activity that you want, especially with COVID in place now and people wanting to be out of the city centres and in more rural areas. And that's why we picked this location, and that's why this development's been very successful for us. There's also a couple of other benefits there in terms of price point. So prices for one beds here are starting at £135,000 and the two beds £168,000. So very, very affordable. And the demand in this area specifically, we saw over the last sort of 12 months in 2020 that property prices grew 16% on average. So it's one of the fastest growing areas of the UK. And that's for all of the reasons that it provides, the connectivity into the city and also the affordability. It's 50% cheaper than the city centre. So this is an example of something that we have in Manchester. We'll call it Manchester, but it's not city centre Manchester for all of the reasons we've just discussed.
And Jay, just worth noting that before you go to the specification, this is not on the portal as yet. We are still doing our final due diligence, as you can imagine, with what's going on out there with solicitors, etc. We are doing our due diligence, but we hope to be able to bring this to you soon. Just a little bit of a caveat there. Sorry, Jake.
No problem at all. Just some internal images of what it's going to look like. So as you expect, high-end finish, There's the outdoor space there with the rooftop garden. Perfect example of something that a young professional would like to live in. Someone that's probably working in the city or one of the employment hubs in Media City, but doesn't want to pay the premium of living there and gets to save a bit of money living in this location. Okay, so moving on to the next location. So we talked about Manchester, and there's a reoccurring theme here. We spoke about Manchester, Sheffield, and Birmingham specifically. So I'm going to move right into Sheffield now. Sheffield's the opposite of Manchester. So 5-10 years ago, you would have always wanted to have bought in central Manchester because it was a growing city. Sheffield is at that stage now. So the opportunity lies in the city centre. And this is Sheffield city centre on the map that you see here. We have a development in the heart of the city called County Court. In terms of what's going on in Sheffield, very much a similar story to Manchester. There's lots of regeneration going on in the city centre. Sheffield's always been known as a student town. And as I said on the previous slides, at least 50% of the students that go to these cities are now staying in the cities and working in the cities. So there's a huge demand for residential property. It's not just a student town now. And the reason the students are staying is because of the regeneration that's going on. And you've got large corporates that are moving into these locations. HSBC have an office here in Sheffield. You've also got digital at the Sheffield Digital Campus, where you can have all of the tech companies, startup companies. There's mass upgrades to the public realm. There's a big tram system in Sheffield, so very well connected, and lots of office space being built. So big corporates moving in, the likes of those being Boeing, McLaren, Rolls-Royce, and Toshiba. So again, all large corporations. So these students that graduate want to move into these corporations, get a job, work and live in the city. So prime location to be in Sheffield right now is in the city centre. As I've previously mentioned, it's probably 5, 6, 7 years behind Manchester. Development that we have is, sorry, Chris.
I was going to ask, fortunately, you've got Donna on the mortgage side of things. Donna, questions just coming at the bottom of the page. What given Eccles at that sort of purchase price, what could people expect to rightly borrow on a buy-to-let mortgage?
Okay, so there's a lot of noise out there at the moment, and a lot of banks have relaxed the criteria. So you are getting product up to 75%, sometimes slightly higher. Although, as you know me, Chris, you've known and worked with me for a long, long time. I'm very cautious around the loan to value. So I always say going at that 70% loan to value mark. It's a really good sweet spot. Not only that, it allows you to have access to more product and cheaper products than if you're pushing the LTVs higher. So 70% LTV and rates you would be looking, depending on nationality, where you sit in the world, obviously, you'd be looking anywhere from sort of low 3s to 5%.
Questions have come in whilst we were talking. Fixed rates, I know that in other parts of the world, say America, and I know it was somebody in America tuned in. Fixed rates, are they still available or very few available?
No, yeah, absolutely, they're still available. And sometimes the fixed rates are slightly lower than the actual tracker deals. So there are definitely some really good fixed rates. What you tend to find is the longer fixed rate products, just purely based on the way that the lenders do the calculation for what they'll lend you, the longer fixed rates gets you higher borrowing. But with the yields at around 5%, that shouldn't be an issue anyway. Yeah,
thank you. Sorry, Jake, I like to take these as
no problem. That's good.
and people had a chance to study County Court for a long time there.
Good to break it up. Everyone's got to have a look at the grade 2 listed building. So yeah, this is County Court. So again, another example of what we do at Global Residential in terms of, you'll see there's a reoccurring theme here. Everything that we take on tends to be quite boutique in terms of its size. We're not taking on mass developments, taking on slightly smaller developments that have, sort of key drivers as to why people would invest there, and also thinking about the mortgageability of these products and the rentability and saleability. So this is County Court. So this is a grade 2 listed building. So it's got a very traditional feel to it. An external image here is what you see. And then that's been refurbished internally to a very high standard. So it's 23 units, a mixture of 1 and 2 beds. This completes early next year, right in the heart of the city centre. So you're walking distance from absolutely everything. The key with this is because you're in the city centre, you want to have a high spec internally. So this is a full smart home with all of the latest technology. There's a residence gym in the basement, and then let's just go into the spec itself. So there's a gymnasium in there. You've got everything you can connect to on your phone. So you have Google Nest, so you can turn your heating on and off, your lighting on and off. There's video technology to come in and out of the apartment. Very, very high-end internal finish. So you've got a mix of the traditional on the exterior with the new technology with the interior being right in the heart of the city. Okay, and then the last location is Birmingham. So again, Birmingham, very much like Manchester. So the city centre, which is this area here, if you can see my cursor, is very much established. Lots of regenerations happened in here. There's not much space left in the city centre. Birmingham, it's a struggle for Birmingham to ripple outwards like Manchester is, because there's areas here where there's lots of residential property and affluent areas that people have been living for a long time. What we do have in Birmingham is you have an area called the Jewellery Quarter, which is walking distance to the city centre. This is the affluent area of the city, effectively. So this is the place where you want to live. If you're someone that's been working in the city and is established in the city, you're going to want to live in this area. We have a development in the heart of the Jewellery Quarter called 5060. Let's just look at the regeneration around the city. So again, we talked about Manchester and what's happened there. Birmingham, very much the same. So mass migration from big businesses moving from south to north. HSBC moved their headquarters from London into Birmingham. Next door to them, they have HMRC. And then you have some massive players in the market, Deloitte, Deutsche Bank, PYC, all big companies, Barclays, KPMG, big law firms, big banks. So someone that's living in this area will tend to be working in this mass employment hub of large employees. So lots of opportunity, which is why people want to live there. And then we have a development, as I've said, right in the heart of this Jewellery Quarter, which is called 5060. Now, the beauty of the Jewellery Quarter is everything is exposed red brick. There isn't anything over 8 stories high, so you can't have any mass high-rise, big glass shiny buildings in the Jewellery Quarter. It all has to look very similar. So it has a traditional sort of English feel to the location, which attracts people, which is why people want to live there, because it's not a big concrete jungle. Our development, 44 units, a mixture of 1 and 2 beds, completes Q1 next year. It's walking distance from everything where you need to be. So from your main business district to shops, retail, absolutely everything's there. In terms of pricing, prices in here for the 1 bed start at £190,000, with the 2 beds at £255,000. Now there's a bit here sort of in asterisks talking about comparables. So just to give you an idea of what we do as a business for our due diligence, we will look at comparables in every area where we're looking at development sites, and they won't be comparables that are on the market and properties that may be for sale or maybe for rent. We'll look at comparables in terms of prices sold and rents agreed in the local area. So this particular location, there's lots of established buildings in the Jewellery Quarter. So some of them are selling for £400,000-500,000 when you're looking at the 2 beds. So the prices here on average are around 22% below the market comparables. So a real value opportunity in this location. And then just going into a bit more detail about the Jewellery Quarter itself, as I've said, it's an area where people want to live. Property prices over the last 5 years have grown 26% on average. So it's the highest performing area of Birmingham. And then the really interesting point there is if you put your property on the market here for rent, it will rent on average within 1.5 weeks. So twice as fast as anywhere else in Birmingham on average. And that really is because this is a place where people want to live. And that goes down to the way it looks, the way it feels, and the specification. So it's a slightly higher end spec in terms of the internal finish. These are some CGIs of what it might look like or what it's going to look like. It's somewhere where a professional will want to live.
It looks great, Jake. Looks really good. And again, you know, just to reiterate, they're not on the portal yet, guys. Sorry, anyone that's looking on there. Just doing the final bits of due diligence. Andy Pickett's working hard with the lawyers, and they should all be on there very, very soon. But obviously, you're going to take inquiries. We're going to take inquiries for anybody that is interested until that final stage is done. But it looks great. Thing is, at the moment that I'm reading is that these developers and architects are just having to sharpen their pencils because, as you mentioned in the previous one, a lot of people now have changed their view. They would have been pre-COVID, and they want a place where they can go downstairs and get their nails done. They can go and have their office or some meeting space downstairs. They want a cafeteria. They want somewhere like we heard last week with York, where they can actually hire a dinner, a place where they can have a dinner party. These are now places, not just a block with loads of apartments in. They're actually a nice living area. Do you agree?
Definitely. And that second room, a lot of people are taking a 2-bedroom now as opposed to a 1-bedroom and considering that second bedroom as an office space, somewhere to work. So yeah, you need to really be in a location that meets everyone's needs. Everyone's got slightly different needs, but yeah, totally agree with what you're saying there, Chris.
JQ, just a quick one, just come in from Chris. Monthly rental on on Jewellery Quarter. Any idea?
For a 1-bed, anywhere from £750. For a 2-bed, from £1,000 to £1,200, depending on the size of the unit.
Okay, and Paul, you're still there. You might be able to answer this question. It's just come in from St. Petersburg in Russia from John. So I don't know if you can answer this or anyone can answer this. Can you buy with crypto? And I know where John's coming from with this. Has anybody, Donna, on the mortgage side, have you got crypto coming in there in any way?
No.
No. Okay.
Yeah.
I don't know.
It's a little hard to go to a lender and say you've earned your income from crypto.
But can they pay deposits by crypto?
I think just on the yeah.
Hello?
I think his line's crackled there.
Yeah. Sorry. Back to you, Jake. Draw a blank there.
Yeah. Just to sort of answer that question. Look, things are moving. People are starting to accept crypto a lot more now, but certainly not that we've dealt with anyone in the property market yet, or any of the developers that we're dealing with. They may be on a slightly different basis in terms of an institutional investor buying land or a whole building, but certainly not on a fractional basis where you're buying a traditional buy-to-let. That's something that's not in the market yet, as we've seen. Will it come? Don't know, is the honest answer. But yeah, it could do.
Just on that, Chris, just to let me finish with regards to the mortgage, there are mortgages out there where the client doesn't need to show income. Okay, so we've just had a new product launched about 3 weeks ago now, where you'll get 60% LTV. As long as there's some good assets in the background, the client doesn't need to show the income. Not the best rates in the world, of course they're not, but there is borrowing out there for that type of client. And really, we don't really want to show the banks the crypto earnings and all of that and make it complicated. So there are products out there where you don't need to show the income. You can get up to 60% LTV, and the product would start around 4.28, I believe.
That is really, really handy to know. I actually didn't know that. I mean, I'm not going to go back down the non-status route, but wow, that's good to know, Donna. Thank you.
Absolutely.
Sorry, Jake. Were you you're in mid-flow with 3 key investment features?
3, yeah. So this is the last part from me, and then we can just open up to some more questions. But just looking at 3 key investment features, again, something that we look at as a business. So we'll always look at price. Are we getting an area that's of value? We'll then draw the comparables, as I've already discussed, to ensure the price is correct. And generally, anyone that's buying off plan is buying at a discount. They're buying at today's price, market price. Over that build period, buying in these key locations where there is growth, you should see some appreciation over the build period. And then we look at risk, and that's all down to location. Again, we'll look at locations like Birmingham, Sheffield, Manchester, where there's less risk because there's opportunity there, there's property price growth, and ultimately you're getting the right type of tenant. So the tenant demographic there is ideal for investment. It's primed for a renter. A professional renter as well, someone that's got a good job that will look after your property. And then last but not least, we do what we call is the eye test. We ensure that there's a good rental yield available. Most of our investors will be taking mortgage finance, so the yield needs to be in place to cover the cost of the mortgage possible. And obviously we're only looking at areas where we'll see some capital growth. So for long-term investment, you'll see safe and steady growth over the period that you hold the property. That is everything from me on the slides front.
I think Paul's having difficulty on the volume thing, but one thing that I've learned over the last few weeks is, and it's an often used phrase, location, 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 and it's not really it's in two ways, but the one I always feature on is when it comes to location, who's going to live in it? How quickly is it going to rent out? And that comes down to when you mentioned Birmingham with Deutsche Bank and HSBC and these major companies coming in. And of course, the students are coming back. COVID is now hopefully on its way, and therefore at the end of the summer the students are going to be back. I know we're not talking about student accommodation, but we are talking about professors and lecturers and people that are going to go to work in Rolls-Royce, and they need somewhere to live. And I think that is just, well, that's the question I get asked most probably is how quickly will it rent? And that is down to location and all the factors you said, whether it be Sheffield or Birmingham or wherever.
Yeah, exactly that. And I think it's important that the type of build and the size of build is always considered as well. So you don't want to be competing against 200 other people in a large development. Now, it's not to say that it's a wrong investment. It can work in the city centre. But when you're looking at these growth areas or areas of opportunity, ideally you want to be, in a smaller boutique development where there isn't so much competition from both rental and resale.
Yeah, and the buildings look smart, and everyone. The stats now for students is phenomenal, isn't it? Students are staying in Birmingham, Manchester, and Sheffield, and these places, York, because they like it. They're a nice place to live. They're not going up to Manchester, getting their degree, and coming back down to London. They're staying up there, and of course, the government is actually encouraging these big companies to go up there, and they don't want because of the global financial crisis. They don't want everything stuck in London and it to suffer like it did. So North Shoring is on the news, as I mentioned, the Bank of England in Leeds. It's all happening up north, which I'm not from, but there we go. I think Donna's from the north of England, actually.
Chris, I just wanted to add as well to that, it's quite encouraging to see that you've used the comparables of what's actually been sold and completed on. Which is so refreshing when we have seen over the last 18 months very cautious surveyors. But if the surveyors look at the comparables and they're looking at sold and completed, the fact that you've priced yourself in that market is amazing. So, hats off to you guys at Global Residential, because, we come up against a few issues, but the fact that you've priced the market on sold and completed properties is very, very important.
Yeah, and we provide all that data as well. We can give all of our clients that data, so we'll have everything there available, so it's readily available to see. Sorry, Chris.
You guys are doing your due diligence. We've got lawyers with Andy Piggott working on the due diligence, as I had mentioned a couple of times earlier, to make sure that everything stacks up. And yield is one of the most important, and certainly from your point of view, Donna, it's vitally important when it comes to the mortgage that these figures are not are accurate, and that's why we have to go through so much. But these properties will be on the portal soon, I'm sure. But thank you very much. I think we lost Paul. It's his wedding anniversary, so he's obviously gone off for lunch. But thank you, Jake. Thank you, Donna, as usual. Some questions have come in, but in fact they were covered whilst we were talking. So, and John in St. Petersburg, I'm more than happy to introduce you to Donna with your question that you asked. So thank you, everybody. As I mentioned earlier on, these are saved and on our Holborn Assets property site. They're all there, and this will be there soon. So thanks, everyone. Same time next week, Property Thursday, 1 o'clock UAE. Come and join us, and we're going to be talking about London. So thanks, Jake, for that nice warm up at the beginning of yours. We're doing London.
Yeah, no problem at all.
You're welcome, Chris Hedner. Thank you. Yeah, London next week. Please tune in. Get the kids around, make a cup of tea. See you, everybody.
Thanks everyone.
Chris.
Cheers. Thank you, Chris.
Cheers.
Thanks, Donna.